Almost. All right, we're ready.
All right, good. So first, I want to address a couple of questions came about a trade that we took this past Friday. Actually, catching rockets, it was you who asked about the trade. So what I did last week, I took the week. As you guys know, I like to keep the weekly POCs on. So what you do in that case is you grab it from the first. You could grab it from the Sunday, but it really doesn't change much. Grab it from the first and go all the way to the current. So at that time, my current was, when I take it back, it wasn't here, obviously. It was somewhere around here that I was grabbing it. I think it was like somewhere around here. But if you look at the volume profile at that time, you go back and replay, you'll notice that there was a major shelf. Let me remove this. You'll notice that there was a major shelf right here. And if I just put that volume or level on that highest shelf right there, you guys see where I rejected? So what I was
Yeah,
looking for
you
is you guys.
actually you went short. I mean, I don't know if you went short on that candle, but it was actually the next like wave up was that one.
Well, I shorted here heavily on the 4100s, about seven when they were 687. This is where I added the most here. So is this what you're talking about or something else?
It's the wave right after that one.
This
That
one
one.
here?
Yeah, that's where I went short, I think, and you went long.
You went. I went long
I mean,
here.
I went long, you went short.
Oh,
Yeah.
I was about to say. Okay, well that one's fairly easy. So this was one. This one was our previous low. We broke that one. We came to retest that POC at that time. So if you look at it, this was the highest POC, and even now, very close to being the POC. So when it came there, this was the lower high for the day, right? I was looking for a rejection right here because this is a previous low. So my first entry would have been here, and my stop loss would have been right above it. Right?
Okay.
You had the value area high. So I was betting on what was previous support to become resistance now again. And that's kind of what's happening here as well, right? So you have it here and you see a nice rejection again and then a little, a pump after hours at 6 o'clock on Friday, which doesn't really matter. And then they're able to go. But the whole day, I think we had like a really nice triangle here. You could have gotten it here knowing minimal risk or reward. And then if you go on the bottom, it had a really, really nice triangle as well. And now we're still kind of battling with that. So if you're kind of trading futures, this would be your level to short would be kind of like right here. You break this, come back, and your first reward would be around 41.12. You do have this POC here. So you have about 20 points drop here on futures if you break this little box.
All right, makes sense. Thank you.
Mm-hmm. All right. So with that being said, I'm actually going to switch the tickers over either Qs or SPY. Let's see. So let's go on. I just want to make sure revisit the naked trading part. So if you are struggling a little bit with trading, if you're fairly new to trading, you want to understand the naked trading, just kind of by itself, right? Without any indicators. I'm showing zero indicators besides volume on the bottom. It's really not a lagging indicator, it's just a volume that it's occurring. So what I want to show you guys, let's start from COVID lows. We'll start on weekly, just kind of speed up the things on the side. So as you guys know, we had the pre-COVID low, then obviously the COVID happened, and then we got the massive drop, right? So this level here was the pre-COVID high, as they call it. In technical terms, yes, this is the higher high, and then we made a lower high, which is right here, if you guys look. So we made a lower high, lower high, lower high. So once we we're able to take this level out, then you guys see that we broke it, and what do we do right after that? We usually tend to come back to these breakout levels to make sure that these buyers are serious and that we can continue going higher. And then usually a reversal happens when you break the structure of this. So this is your last, lower high in the downtrend. Then you break it, but the change of character where the supply actually broke, where it triggered down, this is your change of character feature here on this drop, right? So as we call it, this is your change of character. This is where the stuff is reversing really. So you break the previous high and you proceed higher. The only problem we have here, we have never revisited this level here. And just quickly, in IWM on small cap, we revisited this level here already. So if you guys look, that's where we came for a bounce, and now it's kind of going higher, and it looks a little bit healthier than SPY actually. Does everybody understand? Was I on Qs or SPY? Qs. On Qs. So far we have lower highs, and lower lows. Lower highs plus lower lows. That sounds like that is a bearish trend. Once you start making higher highs, so this would be your first higher high, and thanks to sequence, we have this ability to do this. So you have a higher high, here's your higher low. In between here, since you're on a weekly chart, it's looking at major cycles. Let me just take some of this stuff out. Where's the boxy there? Okay. Now you're making a higher high compared to the previous high, and you also are making higher lows. I mean, here you made higher lows all around. You're point higher, so here's the previous higher low, higher low, higher low. You're making higher lows, so higher highs plus higher lows, those become your bullish trends, right? And if any other combo you have that's not higher high plus higher low, or lower high plus lower low, which is bearish, any other combination of these, higher highs, higher lows, lower lows, it's a consolidation. And what you want to do is you want to connect the tops and you want to connect the bottoms. What I mean by that, when you connect so in this case, you see how this was a higher high, this was a lower high. You connect that one, here's a higher low, you connect those higher lows. And now you have what? You have a triangle, right? I mean, I'd say, you have maybe a bull pennant here forming. And usually what people would do, you can play the trend line break, which is this break right here. You can play this break, right? And you would put a stop loss somewhere right below, depending on where the candles are. Information, it's probably not on the weekly, but your entry can be here on this candle alone here. Once you break this candle, you can go along here. What I preach is what? Catching rockets. Where would you take this trade?
The retest.
Yes, you would go on a retest, and your entry would be here, because now we have a little bit more idea what the buyers are doing and what they're defending, right? And how would you know where to take your money?
Probably that higher high.
Well, you wouldn't know this higher high. Well, this one is first one, correct? You would know this here. This is your first profit.
Well, you can also draw. You could also draw fibs on the triangle.
Oh, look at this. So if you take the fibs of a triangle, you grab the swing high to swing low, you're going to hit the 127, and then you're going to hit the 1618 on the penny, right? So your first target on the fibs is always 127. So in this case, if you took it on the breakout here and you put it, your stop loss is 61.8, you're giving 283. So let's just look at it real quick. So let's say you took it right here. Your stop loss would be right here. Your first trigger would be here, which is 264, and the second one would be 459, which is a pretty good reward when you look at it like this, price action trading. Or if you took it here, then your stop loss would be maybe a little bit below this candle, body of this candle here. Keep the stop loss tighter, and then go, right? If you took it off of this one. On the retest, you get a little bit better idea how you can play it, right? Because you know where the wicks are. So if you put it right below these wicks here, you would get an idea where they could try to go for you and, kind of stop you out. And if you look here, this was a really good candle to use. So far, everybody good on higher highs, lower highs. So when you're making higher highs, usually, uptrend that we had for past, I would say 2 years, when even you look at on this chart, it was higher highs, everything was green. And then when does a bearish trend start? Well, here you have a higher high, and you also have a lower high here, right? First of all, this, if you're familiar with the Wyckoff, this is called a distribution phase right here. And usually these occur at the top. Accumulations happen on the bottom. So here you made a higher high and you have a lower high. Right here was your higher low. So now once you make a new lower low, which was this one right here, this confirms what? Once you broke this previous higher low, and now you set a new lower low. This confirms we're in a downtrend, right? Overall, as you know, in Qs as a stock market. So now you have, you know, lower highs, and you have lower highs again here, and this little peak. And now, you know, this code's not catching it properly, or I don't have the settings. But here we are trying to reverse and break what? Anyone? What's this called?
That's a break of character.
This is break of character, right?
Yeah.
This is the first one is a break of structure.
Sorry, break of structure. Sorry.
The break of character is where the supply, where the imbalance happened to break, right? So if you look here, this was your structure going down, and this change of character here, this supply, this imbalance caused that break and went down. And same here, right? This was your overall turn, and this is your break of structure. Well, the trigger started here really on the flipping of the character. So if they can reverse this, eventually 371, there's a high chance that we're going to be going towards the new all-time highs. But before that, we know the 330 level is going to be super, super important. So in Qs, right, I think we hit 325 or
That's
something like that.
He's unlike me right now. Shit. Win loss. Chat.
I'm not sure if you're talking to me or.
No, I don't think they were.
Okay. So far we got the lower highs, you know, the lower lows, the bearish, higher highs, higher lows. Now the best part about this, guys, is that you can use this literally on any time frame. For a lot of you new guys, what I'm suggesting is when you start trading, learn how to trade without it. You can even use ASHI candles, which are not recommended for price action, but who cares? You know, they're not recommended. You know, speeding is not recommended, but you guys still do it. So for you guys to avoid a lot of fake outs, I do recommend that you guys start using some ASHIs and just price action trading, right? So let me just add the session breaks here real quick. Okay, so let's kind of start from here. Yeah, sure, maybe. Yeah, let's start from here. So here, you know, we start the day, we make a new higher high, which would be what? After you make, you know, you set your imbalance. Balance for the day. This is your imbalance, initial balance high right here for this day here, which was July 29th. Then you set the low here. I'm pretty sure you held 50% here or something like that. So let's see, you held 38.2 to 58%, and then you kind of went on the day for that day particularly. So now you know this is your high for the day, but it's also going to be used probably as a good support and resistance moving forward. So we broke that towards the end of the day. If you're not familiar, learn the type of days they're posted in the Trading 101. So this started as a typical day and ended as what?
Extended typical.
So this ended up as an extended typical, and usually we break this between 2 and 4 o'clock, extended typical days, right? Surprised we didn't get a retest this day, but look, we got it the next day immediately. So now we know this is a kind of higher high here, and then you're making lower highs here. So I'll just go on the regular candles for myself. So here you go. So higher highs. Once you're able to break this level here, this is a pretty good long, especially on the retests, right? So here, you know, if you're a momentum trader, sure, a lot of people probably took this, but then when you come back to this area, you can expect a bounce. So here we dipped below, we gapped below this. Once you're able to reclaim this, this was a pretty good level to go ahead and go along. And if you did, you know, 314 to whatever we ran, 318, that was pretty good, $4 on spot. And then you made a higher high compared to the close here. So if you look at this level, sorry, clicked the wrong one. So if you took this level here, we made a higher high. Let me just go in 10 minutes, might be easier. So here's your higher high in 10 minutes. We're not able to break this level as you guys see it. We go down, so we're making lower highs. Go here. So you're making a bunch of lower highs here, lower high, rejection, rejection, and then you're kind of breaking this. So if you go down the line, right, if you go lower high, lower high, lower high, so this is where they're trying to reverse a little bit of character, and it looks like a little bit of consolidation, not a lot of movement, choppiness. This is your level for breaking, right? If you're going to go long, this seems to be a really good level for breaking even out of this trend line. So this trend line here, and what I preach to you guys is this worth it, right? So this area here is potential for rejection. If you take it off the trend line, you're most likely going to reject this level here. So what I suggest is that you wait, usually on a retest here, or if you're a momentum trader and you like to grab 10-15% real quick and be fast on the trigger, you can get in here, but you cannot expect to make 200-300%. It's much easier to wait for a retest. And here, even if you go in 5 minutes, I don't think they ever gave you a nice retest, right? I mean, if you're watching candles, the candle should be getting smaller as you're approaching support. In this case, this was a big full body candle and kind of sliced through it, and you see the volume on the bottom is starting to pick that up as well. So the best thing you can do now, I'm adding volume profile to the picture, is what? If you want to know where this bounce is going to happen. How would you know that?
Well, you want to see like multiple touches.
Yeah, add volume profile. How would I know where this is going to bounce? When how would I know where to get in addition to the higher highs and lower highs? I want to add volume profile. Where would I grab it?
Low to high. Low to high.
Yeah, lower high, but I want to grab from the bottom of this swing low to the swing high.
Yeah, that's what I meant. From the low to the high.
Okay. Yeah. So I was not following. So here, if you look at it, right, so this is where a lot of volume occurred when we were going up. On this bullish run up here, a lot of volume occurred right here where I highlighted with the green little box. So what that usually means is that if you break this box here, there's a high chance that you're going to start running. But usually, typically, 99% of the time, you're better off doing what? Waiting for a retest. And here, they never gave it to you. They took off and literally never did. And then you come back to the higher highs and lower highs and naked trading, and you see here that this level here, let me just do this. Let me extend this to the right. If you look at this level here now to the right, this level here, which was our highest high on this whole run, we failed to break it. We made a lower high here. So if you're drawing trend lines, we failed to break it. We came back though, and we retested this level and popped, right? But then look at this. And this is straight from the example that we even have in the PowerPoint. What does the PowerPoint say? This little break, you don't have to ever count it as a break and a retest. This right here, don't count it as a break and retest. You want the price to do what? You want the price to go away and then come back to it. So your real buy happens to be right here. Do you guys remember the graphic from the PPT or PowerPoint that I posted on volume profile where it had multiple touches on support? So it looked like something, where is it? It looked like something like this, literally. It did this, and then finally broke. They shorted it here. It popped over that resistance, which was this line, and then it came back, and then you take it long here. This is the ideal place to take it long. So support, break it short, break it, come back, and then go long. That's the point of naked trading, is that it requires patience and basically managing your risk and your reward a little bit better than what most people do with a bunch of indicators. So here, if I knew this was my higher high, I'll let them break it. And right here, you were able to get in on this trade and drive it, 318 to 322. That's a perfect trade. As soon as they came back to this demand, this was golden, right? So now, let's say you're like, okay, well, how do I know that this area is going to hold here? Well, you could do one of the things. You could grab this, right? And I don't know, where do we go? Let's say you knew this date up until this date here. What's happening here? How do you know this area is going to hold now?
You have a volume shelf right there in the middle.
You have a high volume node right here, guys. And it supports what?
The
idea of retesting the previous high is supported by a major shelf at this time. So now, for you to go along here, it was pretty much, as I call it, easy money. if you go along in here and they dip it below, you executed the trade that you should have been. You should have had the stop loss probably here on the previous run of the value area high right here. So your risk would have been probably minimal, right, in terms of exposure. So if you went in here, and let's say you're like, okay, I'm going to go this way, and your first target is right here, 1 to 5 trade, probably not bad for intraday trading for what we do, right? This is a hell of a trade in my mind. And you know that it was going to reject right here. So there was a value area high here. You use the top shelf and the bottom of it as a first target. And then the second target would have been probably somewhere around here, this little shelf here that was existent. And that would have worked out nice, right? First, second, third, or if you want to treat this as one, you can definitely use it because they're very close. So if this zone here was your first target, then the second target, and you see now you got 2-to-1 trade here. Do you guys understand how to tie the previous lows and highs, resistances, and using volume profile to help you determine? So far, so good. If you don't,
I'm missing the retest.
okay, fair enough. Okay, well let's go on 65 minutes and see if it helps. So far you see that we had a nice consolidation here, and then we had a drop, right? So if I wanted to know from where we dropped and see where the sellers are, I would go from this box here from the beginning to here, right? And what I would do then is draw my POC if I can. So I'm just giving you my whole dump right now on the brain. So then first revisit to this, what do?
Wait for
So first revisit to the POC from the bottom side. You want to do what? As you're coming down and the heaviest volume that was accumulated here, you're approaching here. What do you want to do, guys?
Okay. Draw your bonds.
breach it.
Well, you want to, in terms of trades, you want to short this guy here, right? So if you look to the left, let me go on 10 minutes. Okay, so if you go on 10 minutes, you want to short this guy and put your support right, kind of above it. So look here, if you took this at 304, you took this all the way to 300. On the first tap of that line, you made $4. We are not able to, you do not want to take the trades inside this range. We say never take the trades inside the zone. But once you're breaking the zone below, you can short it again, right? So this is just price action with the volume. I'm just going off of the sell-off and where I can expect sell-off to occur. First zone was right here that we could expect it, right? So they're able to break that, and you see how choppy this zone is. And in between, there's really not much volume. So it tells you that the structure of this sell-off was not really heavy on the bottom. There was a lot of sellers here at this 306 level. They're really accumulated at this level here. But that's only from this sell-off here. And I'm talking about, May 26th. So let's say June 16th, and that's when we started the bull run. So now, let me just kind of explain what you're talking earlier that you're not following. So let's see if this helps. So here we had the sell-off, right? And then you have the lower highs. You have a lower high, you have a lower high here, you have a lower high here, and then you started kind of consolidating and curling a little bit, right?
Yeah.
So here you have a previous high or lower high here. So if I draw that line, once you break this line, for instance, you can come back for a retest, right? So you see here, we broke it. You probably would have gotten out in here and you would have lost money because it would have stopped you out because we continued down. Okay. If you're using price action alone, you would have lost this trade. And then you reclaim this level again, right? You go here, you come back quickly for a revisit here, go up, revisit. Some people would take that. It's not the ideal trade that you want to take because it's not a real retest. And then they take you again on this support resistance here. It's telling you the buyers right here are what? They're really not respecting this level. Their own level here on the previous high is not really being respected. So one way you can figure that out, and what I'm suggesting is that you use volume profile in addition to this previous high. So this is my previous high, lower high. Now a new high was made. So this high is higher than the previous lower high. So that makes this one to be the higher high, correct? So now if
But
I take, mhm.
but the previous high, why are you using that previous high for your line? For your
This one here.
yes.
So that was my previous high right here. I'm trying to draw a line here. If I was at the time, let's say I was in the middle somewhere here. Like let's say that we're in June 17th at 158. I'm waiting here. Either we're gonna break it, short it here, or wait for resistance. According to the volume profile that we had earlier, there was really no reason to short it here because there was no volume or any rejection until 288. So for me, this was telling me that this high was not going to be very strong. So for me personally, I would have expected this to be the weak high and kind of break through it, even though the candle here was telling you big sell-off occurred, right? But the volume was really, really above that. This was almost like a little trap. And you see in the future, this level never acted as a bounce pad because it was really never relevant. And that's what a lot of candles and people that use just wicks, they see that. They don't see much of anything else. They see the wicks and they're like, okay, I'll get in on this candle on this wick break, but they don't see anything else. But now if I draw my zone, let's say we remove this one, because we're using the higher highs, lower highs with the support of the sell-off, I'm able to see where the previous highest volume was. So if I was going to trade it, you break this level, my entry would have been here, and I would put my stop loss right below, and I would have been stopped out. Then you come back, and you see how choppy we are. In here, we really never had an amazing setup to take it long. Now, if you come back to this, somebody's not on mute. So now if you're going, somebody's not on mute. So now if you're going, thank you.
Sorry, it took me a second to find them.
Yep. So now you see here, even though it looks like a ascending triangle, it looks like a format that you call this an ascending triangle. You're making flat top with higher lows. The only thing you're missing here to be in a bullish trend is a higher high. And boom, you get it here. So this break here should have held and should have respected, but it didn't. And it's not being respected if you look, because there's not a lot of volume built from here, to here. And even if I change this guy now, and I look here, let's take a look at it, how it changes it. So that volume is still not really heavily built here. Even as they're building this breakout here, they were not really building anything crucial to know. So now let's go all the way to the breakout, and you see here, once you break this level, there's a little gap right here to 298. So it was about $2 that you could have played just on the break right here off of these levels. And I'm grabbing it right below the volume profile. I'm grabbing right before the breakout so I can see how's the volume structure looking. And here you're able to grab that, and then naturally you should know, right, that this should be your, this should be your first support or first resistance is right around here. And then, if you look at this, the whole profile from here, you'll see that this is a P-shaped volume profile. You're going to have a POC running right across. Okay? Does this help, or you're still confused? It's okay if you're confused. Maybe you lost.
Oh, I think I server muted them. Sorry, it was Henny. Let me unmute them. But they also said they keep dropping off. They're actually not in the chat right now. So.
Okay. Does it make sense to everybody else how we did this, or any questions? Higher highs you can play on the breakouts and retests, meaning the higher lows and higher highs. When you add the volume to it, it will add you a confirmation if that's a weak high or a strong high, so you know what you're dealing with. Are you dealing with heavy sellers, or is it weak sellers that are around? Obviously here, there was not a lot of sellers at this level, so they were not really, aggressively protecting this level, because you're able to make higher lows the whole time and accumulate right below this resistance, and that resistance had a gap above it. Here, when we broke this above it, a good entry would have been here. If you're trading professionally, your stop loss, you would put it kind of right here and go long. So if you look at this, so if you went long here, your stop loss, your first, target would be this level right here, which would have been 2-to-1 trade that you would have taken. Could you have made the, a little bit less risk here and push it to this wick? Probably, if you push it any higher, obviously to the previous resistance or support, there's a high chance they're going to stop you out on that trade itself, right? So does it make sense so far, the naked trading? And you can do this on any time frame. I can do this on 5 minutes. Let's look at ES, see if it's moving today. Not really. Let's BTC using USD. Okay, so let's take a look. Oh my God, what is going on with Bitcoin? Look at this price action. Okay, well, let's take a look at Bitcoin here. So it had a higher high, lower high, lower high. So if you wanted to really connect these lines, you could do this. You could go along on this break right here. So usually the first break, and they will come back usually to that retest. And from there, you can take that long, okay? So here, you have a lower high, lower high, lower high. So this is your last lower high, and this happens to be your break of structure right here. So if you look at it, once you break this level, you're breaking the structure. And then once you break this level, and this is only in 10 minutes, so don't get your hopes up if you're on Bitcoin. This is just your change of character. Once you're able to break this level, there's a high chance you're going to change the characters. How do you play this, right? So you have the lower highs. Let's say we're here. They drop it. Now you have the lower highs. Usually, you can play the retest from the bottom. And this happened on SPX on Friday. We gapped down, then we accumulated. I mentioned to you guys 39, 13, or 18. I don't know what level it was. Once it breaks, you can go long. And that's what happened here. They accumulated, they dropped it, and then we made higher lows, right? So you're accumulating with the flat top, and you have higher lows here in this area. Once you break this, you can go long on this level, or you can go on the retest. I mean, even here, a quick retest came back, and they went long. I don't really consider those to be retest when it just peaks above it. I want that stock to actually, or whatever the instrument is, I want it to go higher. Was this a good break here? You go from 23 all the way to, that's not bad. I mean, you could consider this to be the retest, and look, it comes back here. You take that and you take your 10-15%, and you're done for the day. And then you see how we went a little bit higher. We broke even the change of character here, and you came back to that and you tested it. You lost it here again, meaning you went below it. You came back and boom. And now you're kind of really fighting at this level, at this range since, what's this, August 6th, right? So what is that, yesterday? You're still fighting with this, right? So the only way you can go along right now is on the momentum on the breakout of this level, or if you come back to 23.05, put that and put a stop loss right below it, and you can go long. Because right now you're making higher lows. This is your previous higher low here. Let me change this. So this is your previous higher low here right now. And then you have another one right here. So you're making higher lows if you look at it, right? But you're also making lower highs. So if that's the case, you can do this, right? You connect your lower highs and you have your lower lows, or higher lows in this case. And now you have the levels for potential bounce. Where can you play the bounce, right? If you're going to make a higher low, most likely you're going to be coming back to 21.54 to get some kind of level on the bounce. So now what I'm suggesting that you guys add to your MO is, well, if I grab it from here, and I know this level is the high, right? I don't know if it works on Bitcoin, guys. I don't trade Bitcoin. Probably not. Yeah. Anyways, I would have grabbed from swing high to swing low, and I would expect to see, just looking at price action here, I would expect to see some kind of bounce coming here in this area. Does that make sense? How to use the previous higher highs, lower highs to confirm with the volume profile? Does everybody follow or not? Does everybody follow?
Yes.
Yeah, it's super informative, Shorty.
Because this is one of the best setups that you can play, guys. This is pretty deadly. When you combine the two, this becomes really, really, really powerful. And I mean, you know, we've been running a lot lately in terms of SPY from the 16th. So the best thing you can do now, and we're going to kind of deviate towards the watch list and use the same tools. So you see from the 16th of June that we've been really, really taking off. I mean, I'll grab it from all the way here, and I'll grab it to the current candle, and this will give me, you know, where are a majority of the buyers lining up to be, right? And if you guys know, if you're not familiar, so the orange line is considered a POC. This is where the highest point of volume was traded at this level. So it's called point of control. And this is where highest volume was traded. And you cannot ignore the other shelves here. So if you look at this shelf here, I mean, this shelf here looks pretty big as well, right? The 384. If you just look at these support zones right now that we got, every one of these is going to trigger some kind of reaction out of the market. Like there's going to be buyers that are going to be protecting these levels. So if you look at this one right here, what is this, 396? And then the last area of support before, you know, if we decide to go, you take a look at this little guy right here. So this is where basically we have the next level of support and resistance plus this one that I somehow missed. There's just, you know, a lot of them here. Okay, so now you're able to see where the buyers were heaviest on this run here. So if you pay attention to this right now, let's kind of go, sorry, it pisses me off when they're not lined up. So now if I zoom in a little bit, the highest volume that happened is right here. So, you know, if you're a swing trader, will this ever be revisited? I am pretty certain it will be, right? I mean, all these levels get retested, but, you know, when you're trading options, the time is really, really important. So for us, this value area high, this is where, you know, a lot of it happened as well, but you see that they're accumulating the volume here. On this whole bull run here, there's a nice little high volume node being accumulated right now. If they're accumulating to go higher, well, then we know, you know, you got to break this level here. 415.64, you break that, and there's a high chance that you're going to go higher. And then I would say even on this, you have 427. I thought there was a 417.44 level. Maybe, I don't know where I got that from. I don't know why I had 417.44 on SPY. Does anyone have that level by any chance? I don't know if I'm losing my mind with numbers. Okay, maybe I am. I thought I had 417.44 somewhere. Let me check data candles. I don't know. I really don't know. I had it somewhere. Anyways, so this would be the level kind of that you can go after, right? 415.64. And if you guys look, these are pretty much identical setups here. If you go on like 2 hours, 3 hours, as before. So here, if you look, there's a little consolidation right here, which we know, and I'll show you that. So there's a little consolidation box right here. And now, what do you see here? It's the same concept here. Now we just have to figure out which way they want to go. You want to go higher, or you want to go lower, but it's the same two boxes accumulating. You dropped, and you're bringing it back to the, unless you're, you know, your first drop here, which is the sellers were like, hey, we need to clear out the inventory, and then they sold off literally the heaviest here, and you see the volume picking up really heavy. Now we're coming back first time to that zone. Usually what that expects is that last time you would expect it to have a rejection here and kind of continue down. But let's see, right? I mean, the government's supposed to slow down on quantitative easing. I think they reduced it by 2% so far since March on the balance sheet. So I don't think they've eased down on spending and buying stuff. I just think they're saying that for the moment. Then what I do typically is, if you look at this, I want to see the whole sell-off, right? So this is, it's not the high. If I look at the whole high here, is that a high? thought it was 480. Okay. So if I look at the whole sell-off here, I'll be able to know where the heaviest volume was, and well, potentially, if we are able to break these levels, right? So you see this shelf here, if you're able to break it, you're probably going here to 417.95. POC 470. Okay, maybe that's what it was, exit. And then you see each shelf, and then you get really, really heavy in volume in this area, and then the POC of that whole sell-off is somewhere around here at 443.56. So if you go here, we did not discuss the 1K yet. So if we are able to break, let's say 415.64, I would say the 420 just being the even number and psychological number, that's probably going to come really, really quickly here. You're going to come into this shelf really, really, really fast. I mean, you're going to be flying to this area right here. If you're able to break that, you go here. You want to kind of wait and let it cool off on a retest, and then you go to the 427 area. And if you look at the volume profile, once you're able to break this level here, I would say 421.17, you really don't have much till 425. So then you have 420, 425, then you have these candle patterns at 427, and then it's a lot of chop if you want to, there's a lot of volume here between 430 and 443. Can they push it? Yeah, of course they can. I just want to, there's somebody that uses RSI, and I saw a picture they posted here. It looks something similar here. I want to see who can catch it. Between this box and this box, something looks very identical.
You're almost overbought.
They're what?
Overbought in our side.
So if you look at this, how's that look? Trying to move this. You guys see it now? So there is a bearish divergence building up in this range again. And it doesn't have to be a huge divergence here. It's just that there was a seller here. And, we have the value area low. There's a lot of volume here being accumulated. You see that there's two volume nodes, almost ticked right here as where we are right now, currently all the way down. Once you break this level, $5 run up is pretty much imminent. So long 415.16 forward to 420, fairly easy. And then, if you're going to break it short, they'll find the short level here shortly as well. Everybody's looking at the level, right? The low and the range, which is the right thing to do. So if you look at this, I would say once you break this level here, 405.53, for us, it's going to mean that you're going to be going to this 395 level. Okay. And Dr. Evil, point of control is where the heaviest volume was traded on the stock. Okay, so probably go along here and we'll take a look at it. I don't know how it looks in 30 minutes. So for anyone that's new, when we trade, let me just take this crap on the bottom. When we trade 30 minutes, what we do is that we'll mark it in 30 minutes on TradingView on Thinkorswim. If you're using that, it's 30 days, 30 minutes. And then under indicators, if you go here, you go under technicals, you go to volume profile, there's something called session volume profile. You want to put that on. I already have it, so I'm not going to double click it. It's right here. It'll give you these little, volume profiles, and each one of these profiles represents one date. So you basically take a look at these, right? And you can see, the value area here is kind of making higher highs. It did here. Now it's making lower highs in terms of the value area. But then what we notice and what we go for in this Discord is we try to find these POCs, like for instance, this one right here. And we could call this one maybe no longer a Epoch, but just a POC. So let me delete this line.
Shorty, really quick, while you're not talking, I just want to emphasize, do not use the session volume profile HD. A lot of people think HD is going to be better, and they end up getting, like wrong POCs and stuff like that.
Oh yeah, I don't use it, and I don't even know what it does.
Yeah, I don't either, but I'm just saying I get DMs, people asking, and then it takes me a minute to figure out they're using the HD one. So I'm just specifying don't use that.
That's good. Okay, so now we know this is actually a Epoch here. And what I'm going to do, I'm just going to copy this guy here. And now if you look at this POC, there's a Epoch here as well. So now this 396 level and the area that we drew below becomes that much more magnetic to going down. So once we lose this 406 level, if you want to call it, I think it was 4055. Once we lose this Epoch here, so which is 40528, there's a high chance you're going to be going here. And how can you tell? If you look at the volume profiles, what's there holding this? Look at the volume profile structure between these two. So you had a bullish one here called the P-shaped volume profile, and then you came back right here. You see that you have a low support here. We never revisit that, right? They should have dumped it here and then proceeded higher. They never did that. So now they left, a Epoch here, and we're probably going to go here at some point, sooner or later. You left another Epoch, which is right here, right, 396.4, and a really poor structure in terms of volume profile. If you just take a fixed volume profile from here to here, here you go. So there's really tiny little bit of volume here. Look where the POC is on this whole run up. As it should be, it's on the bottom. So there's a high chance, all of these low volume nodes are going to be killed once the bears press in and they start selling those iceberg orders. This will not be able to hold it. Guys, please go on mute unless you have questions. Okay. So we know that we have a couple of epochs lined up, and then there's another one kind of like right here if you guys look at it. So there's another epoch, and I posted this over the weekend on Twitter, and I gave you guys a PDF as well, if it was actually off of these charts. There's another epoch right here, and the epochs are probably, I would say, 10 times stronger than the regular POC in terms of magnetic price movement towards it and reaction at it. So this one here will be just a regular POC. They dumped it below, they came back here. So this is just a regular POC for now. This is a regular POC. You can mark these right here. But
I have a question.
Sure.
So you said if we broke under 405, it's high chance we'd go to
396.
396. Would you be looking to go long on a retest of 405 too?
On 405 here, yeah, I would go long on the first tap of it. Yes, I would go long. Once you breach this area, I would wait for a retest and go long, go short 396.
Okay, cool. Just making sure it's.
Yep. There's a high chance you're going to get a retest. It's just that it's a very poor structure, right? So if you grab the low all the way bottom, right? So call it July 14th here. You grab this run here. You see the structure is really poor here. There's a little bit of volume here, tiny low volume node holding this. Well, Dave, if you're a buyer, right? Think about this shelf and what it means. If you're a buyer here on this shelf here, you bought some shares. I don't know how many shares. Let's say you bought 10 million shares. And you're like, man, I'm just going to, if they bring it back, I'm going to buy it again. And this guy puts an order, let's say at 406. He's like, I'm going to go long. I'm going to defend my long position. So when it comes back here, like this one here, I went long, price did this. And now when it comes back here, he's like, man, I'm going to go long. Well, if he goes long here, well, think about these sellers, if they are sellers, and they could be, and we'll find out probably within a few days. If these guys were sellers, they're going to send a lot of orders, large orders to be executed. So his buy orders are going to be literally accumulated by all of those master, as we call them, iceberg orders that are going to be here. So let's say he puts in $10 million order buy. Well, this guy that's trying to get rid of, look at the shelf difference between here and here. This guy that's trying to get rid of 100 million shares, he's like, oh, okay, well, thanks for liquidity. Thanks for buying these 10 million shares. And then he goes down again to this level. If this buyer is no longer here and offering 10 million shares, what does the price do in the auction? The auctioneer goes, hey, going 406, nobody raises their hand. What's next?
405.
Well, they go anyone at 405. And this guy here, maybe at 404, this guy here is like, hey, I'll raise my hand. I'll buy $10 million. The seller that has 9 more orders of, let's say $10 million, he's like, okay, sure. You buy right here. They pump the stock up a little bit, right? You get a little bounce. So you get this. And then this seller here is like, okay, well, I bought it cheap at 404, but this seller has 8 more orders of the same size. And he's like, okay, well, let's see if this seller here is real. Now I'm kind of covering the higher highs, lower highs. This guy's like, oh shit, I don't have any more $10 million. What does the auctioneer do? Anyone wanted at 404, nobody raises their hand. What does he do? What does Macy's do when they're trying to get rid of inventory and nobody's buying it?
Keep slashing the prices.
Oh, you keep making sales. And now they're like, oh, okay, well, nobody at 402. How about we go, and the auction happens so fast, right? You have high frequency traders, you have algorithms. This happens milliseconds, right? And this guy goes, oh, 401, nobody. Okay, 400. And then you see a large bid. You see a large bid at 398. Let's say you see $80 million bid of SPY at 398. What do you think is going to happen naturally by these sellers and buyers? You're going to see a nice imbalanced candle where literally it's going to look like this. It's just going to go whoop. They're going to trigger the price to go there, and that's where the imbalance happened. So the supply happened here, right? There was nothing, boom, you go where the demand is, right? So they sold it. They couldn't get rid of it here. You were able to get rid of it here at the large quantity, and you're basically selling at that point, and that's exactly what can happen here. This guy here might present like a little bit of support if the government doesn't step in with their PPT team. And then, if it breaks below, you come back here for a rejection. This guy will be eaten alive, and he's going to be down about maybe 3-4%, probably in the same day. Does that make sense? I don't know who asked. I was not familiar with the voice. Hopefully it makes sense, whoever asked that. I don't know who it was. Okay, so let me, does it make sense to everybody how kind of we look at the things and chart them out, find the epochs, find the demand zones? Does it all make sense?
Yeah, that makes sense. So you would also, if we were to bounce to 415, you'd also be looking to short it there, right? And then just stop above 415.
Well, if we come back to this range, I would expect responsive sellers to come in here and push the price down. You could short it here correctly. It's just that we don't know if this is going to be a distribution or an accumulation zone for a move higher, right? So we had the hot numbers, for the month of July, which means the economy is still doing well. So that means the rate hikes still need to continue. So, and they've been trying to downplay it where it's 50 basis points or 75 basis points. But obviously, neither one of those has cut it yet. None of those rate cuts that they suggested have put a dent in any of it. Even in the federal real rate is at 1.5. So they're reducing inflation by 1.5%, which is woohoo. Now we're at 7.5 instead of 9. So it sounds like everybody was same kind of like COVID. Oh, it's not a big deal. It'll just go away when the summer comes. You'll be good. And then all of a sudden, the whole fucking world shut down, and everybody's trying to freak out. And then you get the supply chain issues, the demand issues, shortages, and now you get the inflation or whatever phase we're in now. So I don't know. Would I short it here? I probably would not take a short at 415.65 unless I see some kind of candle. Let's say, I would look for a 30-minute candle if I see a hammer or something building like this. And I would probably take it right below it. Like, let's say we push to 415, we get a nice little rejection or something. I would probably wait for the next 30-minute candle at that level to tell me what I should do.
Okay, cool. And could you explain the difference between distribution and accumulation? Like what's?
Yep. I'll find one and I'll show you that. Yep. So let me just make sure I got all of this on SPY here. Check off all the points. There's a nice little trend line here that's holding SPY. They held it before. So if we were to come back at this 410 level, this could be a nice bounce play as well. So the way it could go is, you know, we come back here and you hit the 410, and then even if you get it back to 413, this might, this freaking arrow thing never stops. It just continues. So this might not be a bad play here. You know, if we do get a bounce here, this might be a beauty here. And then if that breaks, this means, if you guys recall that NVIDIA 3 months ago, we had the same exact setup. When it was breaking the 200s, we had the trend line and a psychological 200 level. Here we have a 410 level, which give us maybe about $4 or $5 on SPY. If we dump here, it's literally telling you that we're going to go down all the way to this PFC. There's nothing holding it here. So if we are able to break this, retest short, and then if you see candles getting smaller and you see the little curl happening, you know, find the little accumulation zone, and I'll cover that right now. You'll see how you can play that. So let me show you accumulation. Okay, so if you look at the stocks on a bigger scale, let me get out of the log scale. So if you look at, for instance, here on the bottom, it's usually a zone where you have a little bit of contention on the price, right? They're not agreeing to go on the price higher or lower. In this case, this was the accumulation where they accumulated the shares and they pushed a little bit higher. So that's what happened on SPY here. Once you're able to break 39.48 on SPX, that meant that, you know, we're going to go higher. We still haven't made a higher high on it. So 477.51 would be the level that we are kind of after on SPX. Once you break this, pretty certain that you're going to be going all the way to about 200 on this. But this is your accumulation zone right here. If you look at, guys, please go on mute. Come on. If you look at it here, this is your distribution zone. You got in here and you see how we're kind of dancing around, accumulating. Remember, these are 3-day candles. So even if you go here on the weekly, you see that we are accumulating in this range. We're not really making strong highs or lows. We're just kind of dancing in the range, just like here. So this was your distribution zone here, and this was your now current accumulation zone that happened. These happen a lot, and my favorite one is on the Netflix or even Amazon. If you look at Amazon on the monthlies, so if you go on the monthly candles, right, and this happens on every time frame, right? So if you look at Amazon here, and this was a really, really good example. So here's Amazon right now. Every textbook that I know, that I've read, that I've traded, here's how this works. Usually hedge funds, I don't know your experience, and I don't know your voice. So hedge funds like to get 10 times their money, right? And there's something called Wyckoff theory, and you want to get familiar with that. We'll cover it a few times in this training courses here, but you see here they accumulated a lot. Then here it's called the burst or a thrust. They pop it up and they test the market to see, you know, is there any buyers, any retailers that want to take the price? Well, then they see yes, they usually drop it back inside or close to the demand, and then they proceed higher. They'll set up another accumulation zone like they did here, and then they keep going higher. Then right before COVID, you know, started, you know, by accident, somehow they started accumulating this stock since 2018. And then this level right here was critical for it. So if you look at this, they accumulated Amazon shares literally here since October or February 1st, 2018, all the way till April 1st, you know, when the COVID happened, Amazon literally took off. So now if you go here, you know, the level of 102.53, we popped from this level, almost made 100% on this money. And then if you go from the bottom, you know, they went from $14 all the way to $200. So they probably made, you know, 10 times the money on their trades. So here you notice, right, if you're accumulating here, think about these bottom ones as warehouses. Think of it as you're trying to, let's say there was a fidget spinner and you're the maker of it. What would you do to your warehouse if you knew it's a hot demand and everybody wants it? I want the person that asked, what is accumulation. What would you do if you're trying to sell fidget spinners and it's a huge demand and you're the only one that can buy it? What would you do?
I would be just trying to make as many fidget spinners as I could.
Okay,
Buy as
so
many as you can.
you would try to accumulate your warehouse as many as you can, and then you would try to sell them and see if there's a market. It's called testing the waters, right? Or testing the market to see who wants it, right? Then you test the waters. You're like, man, this thing is selling like hotcakes. You're like, man, can we call the guy in China or wherever you're getting them? Can they make more? And they're like, yeah, man, we can make more. It'll be a couple of months. And then what do you do then? You suppress the supply, the market, so you can jack the price up in the meantime, and you accumulate some more. And then you're like, oh, okay, man, my two warehouses are pretty full. I need to start selling these. Well, what do? If you have two warehouses full of inventory of items, just like any other store, you're going to have sales, you're going to have marketing, and then they take off. And same happens in the stock. Once all of these hedge funds, you see JPM and all these banks, all of a sudden they start flipping like PayPal. They started flipping their, the buy targets. Oh, PayPal 140. 2 months ago you were lowering it 70. Now it's 140. Like what changed? Not much change. Is that you're able to accumulate the shares at a much cheaper price, and now you need to increase the PR and publicity to be positive. So then the publicity comes in, the PR comes in, and they're like, man, you're making a killing on these fidget spinners. You're buying them at 18 average, and you're selling them now at about $100. And here you're like, man, $100, I'm going to offload as many as I can, and you sell as many as you can. Then the new buyer, let's say the new guy that was talking here, is like, man, I saw Mike do it here 2 times. He bought these fidget spinners, man, but he bought them cheaper than I did, and he's done with this business. And this guy's thinking, well, if he did it 2 times here, maybe I can buy him at 80, 90, and I can sell him at 200. Well, that's exactly what this guy does. He accumulates as much as he can here, and then he sells it. And he bought so much. I mean, if you look at this accumulation here on the monthly, right? This lasted 820 days. Okay, so if you're accumulating a stock for 820 days, the longer the accumulation, the more violent the move. Okay, just remember that. It's going to be a really strong trend once you break this level. Well, then you're like, okay, well, I accumulated so much. Man, I've been collecting for 2 years these fidget spinners, and I need to sell them so I can make some money. And then you start the good news, and somehow magically the COVID happens, and Amazon hits a lottery. Everybody can't go anywhere. What do? You start ordering on two-day shipping, and boom, Amazon stock pops. And what are you going to do here if you accumulated 100 and it's 200?
Trying to sell them.
Oh yeah, you're going to sell them as much as you can. But since you accumulated for 120 days and you have billions of dollars of worth, can you sell it in one day?
Of course not. There's just not enough demand.
Not enough demand, not enough buyers. So what you do is you sell every pop you can. You sell a little bit. You sell a little bit. You sell a little bit. And you see here, your volume accumulation was 57 million, and the whole distribution here was 35 billion. So I would say you probably have a little bit more shares left here to sell. Well, the only thing that happened is, you had the markets work against you, and they brought the price back to where it accumulated. So maybe you bought some more here, and hence what happened here. You popped from the same level because you're like, okay, well, maybe I should buy some more fidget spinners at the same price I had it before and see if I can make a little bit more money. But now, you're coming to a point where this guy, maybe, like you said, there was not enough demand for fidget spinners this time, and I didn't sell all of the warehouse that I had. You look at the volume, 57 billion versus 35 billion in distribution zone, there's still about $22 billion worth, right, or volume-wise. So it tells you, these are shares traded, right, buy, sell, but it tells you that the same volume between the distribution and accumulation is not close. So I would expect, and I would have expected Amazon to reject here, and you guys know I was fairly bearish on rejection coming on Amazon and swinging some puts. This looks like a pretty good spot to short it and go along with these guys, because these guys are much stronger than these boys. So now I'm just waiting and watching, and then if you do, if you just do this, it's going to be fun. It might blow you off your feet. You go from here, and let's say you grab it to the bottom. They accumulated at the heaviest volume at $15 on this stock on Amazon. $15 all the way to, you're talking about 200. So these are the early guys. These are the inventors who got the shares. They bought them, the hedge funds, the JPMs. They bought them here. This is probably where, you have a big hedge fund starting, and then here's your retail buying. And they're buying at 160 when everybody's trying to get rid of it. So they got so many good news. They said Amazon's 5,000. I've seen those posts everywhere. Retail's like, man, Dad, look, man, just put in $200,000 at Amazon at 150, at 3,000, man, it's going to 5,000. And then, whoop, thank you for liquidity. They're going back down to where, it should be. So that's how accumulation distribution works. So hopefully I did not confuse you, but that's the best way I can explain it.
Very informative, Shorty.
Okay, hopefully that was good for you. Okay, so let's kind of go over the watch list. So we covered SPY. Let's look at ES. Actually, I already have ES charted, so we'll kind of go through it. ES1, not that one. I think it's ES. Okay, here's ES. So ES here obviously had a nice little triangle, even in it now. So if you look at it here, we still got a nice little triangle. We're kind of below it now, and this is a really good shorting spot. We tapped this supply right here, right now, and I think we're going to be dumping here. So you guys might hear me screaming. If we break 4130, I will be shorting ES, maybe even live here. I'll be looking to take this short, see if I can get it all the way to 4,100. Because this here is just the liquidity right now. This was a huge sell-off. Somebody got tipped off on some kind of news here, and then they sold it off, and let's see what happens now. So then for tomorrow, how do we trade this guy? So there's a huge accumulation here. So if I grab it from here to the current, yeah, so the POC here is probably, and what kind of shape is this on volume profile? It's a D shape, right? Correct, Kiss, and I didn't want to. So a D-shaped volume profile, as you guys know, when that happens, usually what you want to know on this whole area, you want to be aware when the 50% is broken, right? So, and that's in the notes in the PowerPoint. And what do you guys think? Where do we reject? You reject it right there at the POC, at the 50% of this whole accumulation zone, which is our D-shaped volume profile. So right at 50%, we are rejecting. So the only way, how can you go along here? Well, if you want to be a scalper and you want to play tiny points, sure, you can go here over 50%, come back for a retest, and then you're getting really, really tight because you would get back into this triangle where it's already compressed. So then for me, the way I would probably play it is I would want to see it over 41.53, take it long, and that means the bulls will gain control. If they're able to break this, the bulls will gain control, and then at 41.62, that means we're going to 200. So if this breaks here, probably a high chance we're going to 200. I would say 80% chance we're going to 200 on this level. So I will short it below 41.30. You can scoop up 10 points if you play big lots, small lots. I'm not sure if you're a trader on futures. You can make some decent money here. I would expect, even if I zoom out on 65 minutes here, this is key right here. This trend line here is key, guys. This trend line needs to break, and I would say, below 41.20, which is our POC, there's a high chance we go, to 4,100. So this is your 20 points on SPX. You guys know how you can make money, even if you buy 5 puts, with our 1K account that we're doing now. You can probably make 20% here, which will be really, really good on a day trade, right? If you put in $200 on it, if you make 20% of that, that's $40 that you made, and you're pretty much done for the day in that case. In terms of, if you just want to be safe and shorting below 4,100. Once we break this, you're going to hit some VPOCs, right? And same thing we do on SPY and all the other ones. I'll just remove this guy for a moment. We do it here as well. Basically, we will be looking to find the VSP and all these levels that we identified before. I just want to know where the VPOCs are. So this level here, 4070, that you guys see, is right here at this POC. And I would call this the VPOC. So this is our VPOC level, and then here's another VPOC. So this tells me here, just based on volume shape profiles, that this was a short rally covering for so far, depending on what we do on the top here, but it was a fairly strong one. Then you have a level here. Okay, so like I've shown you before, if you use VPVR, which is your visible range volume profile, or VRVP, sorry, it's gonna print volume profile that's literally based on what you see on the screen. So if I draw from here, let's say from here, I draw a fixed volume profile, what should you guys see in terms of volume profile? It should be the same volume profile as the one on the right, because that's what fixed range does. It's just that once I zoom in here, this one is going to change, this one stays the same. That's the reason why, you know, I like to use fixed range profile instead of the other one, just because it gives me this, you know, ability to move and zoom in and shift. But what do you guys see once we break the 473?
You don't see everything above.
Say what?
Wait, repeat your question?
Skinny belly.
What happens at 4073? I mean, you have a little zone here, just like we had it on SPY and Qs and whatnot. So you have this little zone here. Once you break the zone, what happens in terms of volume profile?
Skinny belly?
Yeah, definitely a skinny belly. There's no volume. It's called a low volume node. There's nothing here until you come back to this range right here. Come on. Stop messing. So there's literally nothing here. So you can almost catch 100 points right here, and you just have to be patient. Use your 10-minute trend bar, put it on Ashi candles, and ride that bad boy all the way down. And don't forget this level. I mean, don't be an idiot.
I was going to say, you have that POC that you run into.
Yeah. I mean, psychologically, the 4,000, you want to be, me personally, the psychological numbers, because there's a lot of retail now, more so than ever before, you know, and these guys are notorious for these even numbers. You want to be closing down here, because all these guys are going to be start doing what when the approach is here? You're going to start buying calls, and the guys that was short, what is he going to start doing? He's going to start covering, and he's going to start buying ES. So then here, you get a really bounce. First, you get the guy that was shorting, he starts covering. Then you get the guy that believes the 4,000 is magical number, and he's going to start buying. So you get the double trouble, and the stock will get a bounce. So that's why, you know, these numbers are fairly important. 2 reasons. Does it make sense? Hopefully it does. So let's see. So we said if you want to short, you know, have a nice low range, 420, you get the 4,100 level here, which should be somewhere around here, and you have the POC right there, so you can use that as your target. So if you short at 4120, you get 20 points on ES or SPX, whatever that preference, or SPY, whatever you're trading, you get that, you get 20 points, and then if you lose 4100, you have 4073, and this would happen probably in 2 candles here, we're going to get that drop. And that could be as violent as this one here, right? Nobody probably was even able to catch that because it was pre-market. And you guys don't, majority of you don't trade futures, but it was really, really difficult to catch. I happened to be short on this one before, so it did pretty well. Any questions on the levels on this? Safe entry long, you want to go at least wait for 4166. We have 4167. 4166 is so big. It's probably the biggest level on your chart right now that you should be worried about ES. So if you grab this whole thing and you go from sell-off to here, let's see, where was it? I won't do it here. You'll have to go maybe on daily or 8 hours. Okay, man. Where was this one? I don't know. It was 41.66. It was one of these shelves, and probably changed now since we're adding right into the shelf. But you see how important this shelf is here. Once you're able to break this, this level again, 41.67, call it 41.67 for long. Once you break this level, we're going to be running. And we're going to be running all the way probably to $4,200. And it's going to be mainly driven by retail, I think, still. The big boys are still on vacation. So keep that in mind. Okay, any questions on ES? Okay, all right, come on, NQ. So NQ, we'll quickly add the VPOX here. So here, and something for new guys, what you want to pay attention. So there's 3 POCs that are really, really close by, and you know they're accumulating here before we popped. When you set up your settings, trouble finding these, make sure your SVP is at 68%. Mine is at 100 now just because I wanted to see the whole candles. Make sure that your value area high, your value area low are set at 60%. And this is fairly important because there's rules we'll cover. If you guys are ready for it, we can cover next week about the rules of value areas and relationships between them and how they work. But this level is going to be really, really crucial here for NQs, right? I guess 13,000 or round it even. So somewhere between here and here is going to be crucial for a bounce. And this will be the first bounce that we have after we had this imbalance here. If you guys look at here, there's a big imbalance that happened off of this candle right here. So right here is what the huge imbalance triggered. And now if you just draw a volume profile, literally here, draw it from this candle all the way to the end. If you popped from here, if you popped from this level here, and now you have 2 POCs lined up here, maybe 3 POCs lined up on the top, what's that telling you on the top side? Somebody's been selling, yeah, somebody's been selling the hell out of it at the top, right? And then if you guys have been paying attention, there's does everybody know who BlackRock is, the investment company?
Yes, sir.
Look up their insider trading for past 10 days and see their CEO selling almost $400 million worth of BlackRock stock. If you look it up, I mean, why does an asset manager of a biggest private equity firm sell right before this? Why is he selling now so much? Coincidence? Yeah,
Dumpy.
so let's see. So now if you just take a look at this, right? So we had a nice little run. We have, I don't know if I have a clean channel here. Maybe from here, you could kind of make a case for it. Yeah, that could be it. We'll delete this guy. We'll add our tool. Okay, why is my magnet? Oh, here we go. Stop working for a second. I like this one much better than. Yeah. So I mean, you have a nice little channel up here, and we're running into, you know, we went over this supply, and this supply here, if you look at it, we got over it. So we really need to retest it. This support needs to be retested. Come on, why is this keyboard? This level needs to be retested here. So 12.95, I had, you know, 13,000. So this area here needs to retest and hold. And that's going to be crucial for NQ. Otherwise, if you don't, then, you know, you're going to start breaking some POCs here. And he has quite a few VPOCs as well below. And all of these VPOCs here will be retested. So I guess this one, they did a pretty good job on. They actually came back for it. Yeah, well, and then they forgot this guy. And another one down there. And the rule of thumb is if you have between 3 to 5 epochs above, below, usually you're going to be coming back. If it's epochs below, you're going to be coming back down to revisit. And for the guys, that were in this Discord when we had this dump, a lot of them were skeptical when they first joined that we're not going to revisit some of these epochs. This was a epoch here, we had a epoch here, right? I think we had a couple of other ones somewhere. Maybe not. But we said, oh man, there's no chance we're going to revisit all of these. Well, we revisit every single one here. And they played a big role on the rejections and the bounces. So not a surprise. And now what I like to do here, as I mentioned earlier, I'm just going to grab this to see. Whew. Man, this zone here has to hold. So if we lose this, I would say if we lose that 13,000 level right here, if we lose that level, there's a strong chance we're going to be revisiting that 12.5, which is 500 points below on NQ. And then here we have a nice shelf that's being accumulated. You just see how big this shelf is on the. Okay. So do you guys see here? Now, if you're able to kind of go over this level, so which is 13,389, and where do we reject? 13,389. So once you're able to break this level right here, there is a strong chance you're going to be going to this level here, 14.1. Really, really strong chance you're going to be revisiting this sell-off, I would call it, POC here. Okay, does that make sense? Really strong chance that you're going to be getting here to this level. So, and it's not far. I mean, 700 points, not bad. I mean, we went from 11 to, we went from 11 to 13, 4? So that's not bad. From 13.3 to, so another 700 points here. That's pretty doable. Well, let's see what the price action brings tomorrow. Yeah, and then 30 minutes. I just want to see how's the triangle looking. Yeah, it looks pretty good. I mean, here, you have also a nice trend line here if you want to be a little bit more aggressive on your trading. You have a nice little trend line here, and you have a POC, multiple POCs here that's being accumulated. So you could potentially just grab from here to current and see. And you see here, this POC is going to be brutal here. This is going to be a really hard level here. And I would expect if it's good CPI Wednesday, we could potentially break this. If it's anything shady here, we push all the way up to here and then they dump it from there. So it might not be a bad short entry, but a really, really tight stop loss right above this POC here. So 30-point stop loss. And if you nail it, you can nail it for about 500 points on this one here. So that'd be a really good pay. I mean, that payday on NQ would be huge. Any questions on NQ? Okay. Qs we covered. What else we got? Talked about, let me see, Amazon on daily. We go regular hours. Let's start off on daily. Yep, so we have a lower high, and I mean, we don't have a lower low yet, but we have equal lows here. So if we are able to go below this level here, it's pretty good short on Amazon right here, guys. 139.55 breaks, this is a fairly good short on Amazon, and you probably have about $6 drop waiting on this stock. So let's see, I would say from this run all the way, let's give it to here. Yeah, so yeah, once you lose this guy here, you're probably gonna go at least 136.33 potentially. Now let me delete this. I don't care about that one. You know, you could expect a little bit of bounce here, but probably not much, because this here gap, once this kind of gets filled right here, 132, you guys see there's literally no volume there. Obviously, you ran on 10 air. You have about $7 drop once you lose 132. So 139.55 probably goes all the way down to this area right here. So 136. So you have $3 short here. That's pretty good on Amazon. So I'll probably look for this for the 1K challenge. We'll cover the details here shortly. I'll look for that one to be short. And then we showed you guys on the monthly. You know, you see where we rejected here, right at that level here, which was a previous support. Now it's resistance. So if we look at the whole sell-off here, let's go from here to here, give it the whole thing. So the sellers, the buyers, so let's see who's stronger now. So 135 will be the level where they look to support it. And then literally nothing here until, if we break this, there's really no support all the way to about 123. Even that gap there won't probably hold much. So 123 if we break that, the gap area. But keep this levels on Amazon tomorrow. This is going to be really, really good, guys. If you break this right here, this is a really good setup for short tomorrow. Yeah, look at that. Yeah, once you lose this area right here, you're going all the way down. You have 138. You can trim some here. I would expect it to go all the way down. Probably D-shaped volume profile. Oh, no. Wow. So once we lose this area here, guys, this is easy short. I'm telling you, this is super, super good short. If you want to trim, you're going to be trimming right here. And then you should exit right here, guys, at 137. You should be exiting. So we have about $2.30 on Amazon. Roku. Oh, God, this is about to get dumped into the face of somebody. Whew. Okay, I mean, it has a bullish piercing candle here on the weekly. Pretty good candle. It's about 50% of that whole candle there. It is fighting for its dear life right now. Where would you guys short this? I covered this with you guys. Let's see. I'll give you another clue. Okay, so you can short it literally right below this. You're gonna have a little bit of here, but this is going all the way to 71. Like once you break this channel, you want to get out somewhere around here. So if you want to be, you know, trading price action, whoever's asking. So once you break this higher low right here, you can get in. So 78.29. If you believe in psychological numbers or even numbers, then you have this previous low, which is at 80. So if you take 80, you probably trim some here at 77. So that's $2.50. This is a decent shelf, decent high volume node with the value area high. So you want to be getting out somewhere around here. And you have a nice little imbalance here, and this is probably the easiest short on it. And I'll actually watch this one tomorrow. Whoever brought that up, thank you. So we'll set this guy up to give us a little notification. So we'll short Roku below 76.75. This is easy money on this. Yep, I agree, Rich. Yeah. I'll take 76.75 probably on this one and short it below. There's going to be a little bump here on the way down. Right here, 75.31, but not too worried. Once they lose this, they're going down all of it, $70. You lose $70, well, then you come back here, and this will be your area where you can play these demand zones or supply zones this way. That's this runoff here. That the whole thing looks very, very poor. The structure of this whole run up looks like crap. This is, it just looks like it was heavily manipulated on the run up. I mean, it went from 60s all the way to 80s, back 76. Let me just see where's that. That doesn't make sense. Okay, so we hit the 61.8 multiple times here. So yeah, I mean, once you lose this 50%, 79.93, yeah, fill the gap here. I think it was this here. Once you lose this, you're done. Let me see where they accumulate the sell-off. Well, it seems like they accumulated from here. She'll love this shit when it lines up perfectly. I mean, yeah, let it run them to the top of this range tomorrow. I would love it for them to push it here. And if they break this, even better. Just come to this 85 level tomorrow. I'll show you what Shorty does on it. Yeah, push it to this level so I can short the hell out of it. I don't think this is going to go above this POC. This is the POC here of the sell-off. As you guys know, the volume accumulation setup that we preach, and I'm telling you, it's golden. If you grab this sell-off here, and you drop below it, it's your first touch right here. If you first touch, this is your short entry. This is a golden short entry right here on Roku right now. And then just look at 30 minutes. I mean, the way it's been running, there's no freaking way that this does not have epochs here. It should be, every single one should be an epoch here. Okay, well, let's take a look. I'm just going to delete this guy for a moment. Here. Yeah. And then we have epoch on the upper side, which would be a great short, 85. This would be a super duper short. Look at the distribution right here. Look at the POCs, 2 POCs, maybe 3 POCs lined up right in the area. Yep, so that's Roku there. That answer, I don't have YouTube up, so I can't tell who's asking, or let me see if I can get it up. Tesla, let's see. Yeah, almost triple. Tesla's going to hold the sweet spot here, hit it perfectly. So Tesla, if it loses this bear flag here, I mean, I don't have to tell you much. If it loses this, you guys know where it's going. It's going to hit 842. Actually, sorry, it's going to hit right here, 840. And I would draw this little area around it. So once you lose this bear flag here, high chance you're going to break down. And then, could you make it maybe retrace here to 50%? Probably, yeah. I mean, Tesla's fucking wild. Yeah, so it could potentially push to 870, and I'd look to short it right here. 870, I'd look to short Tesla. And then, speaking of lows earlier, here, just to give you an idea, this is the previous low. They're going to come back to test that, and they could trap people here, just like you see it in a price action. They trap it, they go over, and they hit this level. Let's just kind of take a look on the volume profile. What does it line up with? It's a major volume shelf that's occurring here. So if they sold it here through the skinny belly, then they accumulated and they continued selling. That means somebody offloaded a ton more shares on this push down. So now when they bring it back up, the short seller here is going to defend his position and send it lower. So I'll look shorter at 870, 875. And then obviously on this bear flag here, I would short it as well. This might be a nice short on Tesla on this bear flag all the way to 840. I mean, it's probably going to have some epochs on the upper side as well now. So it has one right there. So it has a epoch at 923, and then it has a bunch of epochs. Does anyone remember telling me 2 weeks ago when I said every one of these levels is going to be retested on Tesla? I think I actually posted it on Twitter. I have never. I've traded 15, maybe 16 years. I've never seen this. Yeah, I mean, the speed, the way it went up, watch the speed down. Yeah, this is going to be pretty quick down. And I think it has lost this trend line here. No, man, this is a beautiful short 870. So Bridget, remind us tomorrow on this if you're watching this. This might be an easy short on Tesla at 870 here. Yeah, Tesla has to hold 840. If it doesn't hold 840, God, I'm telling you, I don't have to tell you guys. I promise every one of these is going to be hit on Tesla. So watch and enjoy it and learn. All right, Tesla, what else you guys got? Anyone, any tickers you guys want to review?
Can you chart Netflix?
Yep. Yeah, that's a distribution phase right now. Take a look at it. So this is a typical move in the gap downs, right? They come back, they try to push it as close as they can. Usually this wick on the sell-off that you just saw here doesn't mean that that's where the volume was, and probably it's not there at all. So if you turn on your SVP here, it's going to tell you that, that it's much lower than that. So at one point, this was your Epoch, right? You had this huge sell-off here, 224. So let's see how we did with that level. So now you're building I would say, a rising wedge right here now, or some would call it bull pennant on the previous round, what we were doing here. So you have come on. So you have this type of setup, like a nice little bull pennant. So if you do break this level, they're probably going to fill this gap here. If you look at the volume profile till the end, they're going to fill this gap all the way up to 248. So if you break the bull flag, if you're going to go long on the bull flag, I honestly would not touch it till this level is broken here, until this high, right here, whatever that level is, 230, 206. Once that level is broken, this $16 run is going to happen rather quickly because we have a huge gap on below. I'm fairly bearish on Netflix stock. I do think it's going to go back to about maybe $90 or so within a year or two. Just the saturation of the market and how it's been behaving and the profit margins and the fundamentals, I don't agree with it. I think it's going to go down. And 220, 229 is your short level here. Short below, maybe I suggest that you wait, let it break down this rising wedge, bull flag, whatever you want to call it. Come back. They're going to bounce it off at this level here, 219. They're going to trap a lot of shorts right here at 219.4 because everybody's looking for that 220 break. They're going to trap a lot of people 50 cents below. They're going to bounce it back 229. That's where you're going to be looking for a short opportunity to go down, and then the acceleration really happens once you lose this level here, which is 211.85. So you will get a nice opportunity if you short it. So 219.49 or 220, depending on where your entry is. You have about $5 move. That's pretty nice. And then once you lose 210, you have, I would say you have probably somewhere around $10 that you can play here. This has to be the best reward here, and then the best reward is here. And the short and retest is also great because it's going to build a POC here. Well, it already has a POC here. So I'll look to short it right here below the 222 retest. Does that help? I think the daily, sorry.
Yep.
Thought I took a look at. Yeah, so if you look at the daily here, what's it telling you here? Price action. Sorry to put you on the spot, but what is the daily telling you here?
It looks like higher highs and higher lows, right?
This is a higher high than this one?
Oh, not that one specifically, no, but I was talking about overall.
No. So, I mean, here, you broke the structure here. Your change of character needs to happen at 250. Right now, you have, on the daily candles, you have a lower high and you have a lower low. And just print something out. I'm not saying you don't know, but, a higher high plus higher low is bullish. Lower high plus lower low is bearish. Maybe I can type any other combo. Is consolidation, connect highs and lows with the trend line. So right now, it's telling you that the sellers are really getting exhausted right now. This is called seller's exhaustion. It's coming in. I mean, yeah, there's people that bought it here. I know, what's that guy, Bill Ackman, he bought it. He got fucked by Jim Cramer or whoever told him to buy it. Now, if you lose this 222 level, so watch this now. Here you say, you're looking sharp here. Let's just grab this level up to here. Does this look like a great structure? Once you start losing these levels, you're going literally 222, you're going to 214. You lose that level, you're pretty much dumping to 200. And this right here, none of this is going to hold. Literally, none of this is going to hold. It's going back to the old-time lows at like 160s. Unless there's some news coming out, Amazon buying them or whatever, right? We can't account for that, but yeah, it's in a shitty spot. And I canceled Netflix, if that means anything to you. Not that I can't stand that guy. Fucking idiot. Okay, Netflix, we said Microsoft, right? Let's take a look at Microsoft. That's my favorite stock of all of the tech stocks right now. I mean, right here, it looks like a really good flat top. I mean, here, this should be easy, probably 20-30% on option contracts. So if you look at this 283.79, I don't even know if I grabbed the latest. I call it 283.80. Once you're able to break that level, how would you play this? I want somebody else to answer.
Break it and then wait for the retest.
Make sure you wait for the retest on this one. I promise you're going to regret it if you don't. And don't cry after, because if you don't wait for the retest, you're going to get slapped. And the reason why I say that here, let me give you a clue. What do you think looks like a perfect trap here? Anyway, I'll let you guys teach a little bit. Why do I say wait for the retest here? There's something telling you there's a perfect trap here.
Is it that shelf sitting right above?
You're gonna go on 280, 380. Yeah, I mean, can we make money on this? Hell yeah, we can make money. But what happens with the human mind and the greed? You get in at 283, you're up 40, 50, 60%. They're like, man, this is going to 290. Everybody starts thinking about this, and then they're like, oh shit, okay, well, thank you for your money. This is Microsoft, Penny. And they literally do this. I mean, they're notorious when these setups come here. And then, can they drop it all the way to this shelf here? Why not? Remember, market makers are there to hedge. Options were invented for hedging. They were not invented for retailers to make a living. They were invented for the big boys to hedge their delta and to hedge their positions and to make sure that they're not exposed. So the only way you do it is if you break this. Let's say you break this level here. You break it. And then, the best thing you can do is just watch a little bit of level 2, like tape, and just watch time and sales for the, tape and level 2, and see if there's any orders coming at 283. If there is, grab it and let it go. And then you have the next shelf to go to, right? Probably somewhere around here that you would get 285, probably 290 might be the retest. Okay. That'd be the Microsoft for the long side. Let me go on that. Whew, that looks. Yeah, I hope the long side works. We're in a major supply right now. I mean, this whole run up here is. I mean, it's looking to be some kind of distribution here. So here, if you look, they're kind of accumulating here. Here's your value area high. If you're going to be shorting, you have a few chances, right? Price action trading, you could short it on the break right here and break this would be your short level here, which is 278. Then you would have to get out right here somewhere at 272. So you have about $1 something, right? $1.50. And then, or you could just wait for this here. This would be something that I wait. I'll wait for 274 to break, and then you can just enjoy your money, right? It would probably come back all the way to 264. I'd rather wait for $10 here than fight for pennies here. So this would be my level that I short. But I'm pretty sure this stock's going to be popular with everyone. Yeah, every Twitter world. Another level is 276. If you want to short it here, then you make sure you get out 271. This is going to be a nice bounce here. But this is the ultimate target right here. This is your POC. This is the setup that we kind of live for. You short it here. What do you do here? What will happen here? Can somebody explain? There's two things that happen every time. If somebody shorted it here, what happens here? There's two things that happen. Who knows what they are?
They're buying back, covering the short.
That's correct. The one side that was short is covering. What is this guy here doing that was buying? So if you look at this whole run here, it's probably going to be very, very close. There's going to be some kind of shelf. Oh, what do you know? It's the same level. What do you think this guy, this is where the highest volume happened on the buying side. What do you think he's going to be doing once you bring back the price to his level where he bought it last time?
Buying more shares.
He's going to be protecting his long position, but this guy that was short from here is going to be exiting his short position. So that's the double trouble. Those are the most beautiful levels you can go long on. The guy that was going to be protecting the long and this guy that was shorting, he's going to be exiting and covering. So you get this guy covering, driving the price up, and this guy that's buying also fighting with that, and you get a nice little confluence in 265 to go higher. So, you can short it here, but short it right here between this all the way to this, but then make sure you switch rather quickly because this is going to dump, and then it's going to explode. Not saying explode to all-time highs, But you'll get a nice low reaction from here, probably all the way to here, depending on how the volume is structured. Okay. Somebody said something else from YouTube. Apple. Yeah, Apple's right in the distribution zone right now. Yeah, it's right here in the distribution. So all I did is grab this to here, and it gave me these shelves. So now you're able to see, and my fibs are also from the same area. High to low, and I'm able to see that we bounced off the 50. And here's a nice trend line here, right? So once you lose this trend line, so let's see what's tomorrow. I mean, it would be good on the 10th. What's that? On Wednesday. On Wednesday, we could lose this trend line on Amazon, on Apple. So once we lose this 164, you're going to be going 160. Once you lose that, you're going 154. Then you're going 148. And then you just turn on your epochs, and all these levels are probably going to just match up here. See. Oh my God, it is full of epochs. So here's one. This is where we're going ultimately. There's a nice level here. So this here will become your range because there's a couple of POCs. This becomes your demand zone. There's another guy right there. There's the epoch here. This is a dangerous level, really magnetic. Oh, this is easy money here. It's probably the easiest money you're going to make in the stock market. Lose 160, you're going to 157.28. I'll take a bet if anyone wants to on this one. If anyone's interested, I'll take a bet on this. Whatever you guys want to bet. Once you lose 160, no looking back. You're going to 157.28. Oh, I'll bet. No big deal. I'm just looking to see, there's potentially putting the head down right here. So if you guys look here, it could be that it's making almost like a little head and shoulder, left shoulder. Now the head, come back, bounce, and then. Yeah, I think Wednesday is what this is telling me, that we're going to be crushing. Sometimes at 3 o'clock on Wednesday, we could be breaking this on Apple. So let's see if we stay in this range and then we break. I'll watch Apple here for short. Okay, B8. And this thing, I should have bought shares. I wanted to buy shares at these levels. There's a little gappy here, huh? There's a gap right below here, all the way to here, so $2 something. $2, what? 49. Lower highs, lower lows on this one. Man, it really needs to hold this level here. 163.34. Wow, it moved. For the most part, it moved nicely. Besides this level at 118. Maybe here. Wonder if Nancy Pelosi is in a Boeing, or what kind of airplane is she in. Wouldn't think her own husband would buy put some Boeing. Yeah, 169.05 break over that. You're gonna probably get $1 or something move here. You get $2 moves. So this is your VPOC here. Break over, test, go higher. I'll probably say the break right here of 162.33. You can take it all the way to 154.48 right here, and draw a zone around this one here. This one's going to be a really, really strong bounce here. This here is going to be a nice demand zone, and we'll check it now. We'll just add VP here. We'll see. Oh yeah. That's a nice shelf. So this is the third highest shelf, fourth highest shelf on the whole run up. So this is your value area high, right at 155. So if you break this, there's that level right here that I talked about. So 159.21. Yeah, so if you're able to lose this right here, if you guys just extend that a little bit over 163.38, you can catch this guy all the way to 161.56. It's not a bad move, almost $2 here, right here. So you could play this little skinny area. This is really easy money if you're shorting on Boeing. And then from the bounce perspective or the break, I mean, depends how aggressive you want to be on the stock. You have a nice little trend line on the top. Come on, not the text. You have a nice little trend line here. So I personally would not take it on the break of the trend line because I know that there's this guy here just kind of lurking around. I would wait for 166.5 to take a long. And then you have the levels right above, you have 170 right above that. There's really no volume here. It's going to go, so go long here. Probably grab the rectangle. I did, yep. Okay, well, go long here. I would go short at 163.38. That's what I would do. Yeah, good. I mean, if you like trading BA, that's good. BA is not an easy cracker to trade, just because of the, you have a lot of news that can hop in and change the way the stock's behaving. I personally don't like it, but I should have bought shares when I dipped here. This was easy money on the shares. I mean, it's almost double from here. Even from this guy, you have a nice little channel. Yeah, so here it might be a really strong bounce at that same level that we were talking about shorting. That might be a nice little bounce because that's the channel bottom here. You get that, put a long stop loss and a retest short. At least that's how I would play it. Yeah, the only thing when they do come out with new planes is that they can't get an FHA? Is it FHA? Yeah, the approval. Their planes tend not to stay in the air.
Yeah, it's FHA.
Yeah. Yeah, they don't tend to do too well, but yeah, maybe they do. I don't know. The only thing that I know that's certain with companies like Boeing, as long as there's government, they will do well. So, anytime it dips to 100, this is a pretty good zone. Like even at this level, I might look to add some Roth IRA shares and do some average costing if it dips below 118. I don't mind the $18 drawdown on this. Just remember, there's Airbus and Boeing, and the EU controlling Airbus. They're going to be doing whatever they can to get them the government contracts there, and then you have US, of course, wants to do well for a US-based company making airplanes. So it's a political fight also. Okay. All right. What else do you guys have? Any particular stocks?
Would you look at J&J and XLE?
So there's our man Flip. This is his favorite. So not surprised where it bounced, right? I just grabbed from here to all the way to the high right here. So if you look, where's even if you grab it from there to here, you see this POC, right? So the most effective and the most accurate setup that I've traded and I love trading is the volume accumulation setup, where a stock from a level popped over, like this one accumulated here, this POC, where it's the highest volume where it traded and then it exploded and created imbalance. So it created imbalance here. And then, there was a couple of opportunities, obviously, to short it here. If you look, you had a nice little channel here, and then it literally dumped. And this was your support right here. So this was your entry, 75, 77. Safer entry for me is especially right here when you break the value area high. If you're new to the Discord, there's something called 80% rule. They went above the value area high. They came back, and now it's become, unexplored area because they popped away from it. Once you come back inside of it, there's an 80% chance you're going to go all the way to the bottom of value area low. And this one came very close, almost $1 away from this area, and I don't think necessarily it's done. I would watch, to short it back here again, but this below this level here, whatever that is. Let me make sure I get it for you. 72.91. I look to short it, and it would probably go all the way back to this level here, to this demand zone here. So I'll look for that, and then if you're a little bit more risk averse and more momentum, 71.97, 70 is fairly easy short. And then long, obviously this one is fairly easy for long. I mean, you have a little bit of kind of like an accumulation here at this level. If you're able to break this, and I don't know if you're thinking day trading or what the goal is, but I do think that, XLE, the energy sector, is going to go to all-time highs. I think it's going to go here by December. It's going to be at about 100 or so by December. There's something going to happen in Europe with Putin controlling natural gas and all those resources. I would not be shocked if some of those turbines are broken by accident and half of the Europe is frozen, and then what do you think is going to happen to the prices and demand? They're already talking about implementing some like even and odd days in Germany, where odd days get the heating this day, the water this day, and same in Italy, in case Putin has any ideas on shutting stuff down. So I'm fairly bullish on this. And then if you look here, this is a really good, when you look at it on a bigger scale, right? Like if you look at this, anytime it comes back to this trend line, sorry, I meant to put it right here. Okay. Anytime it comes back to this trend line, and you could probably draw another trend line here. Unfortunately, this system does not have that. Something like this. Anytime it comes back to this zone here, it's a really good spot for buying some swings, usually typically month or about 8 weeks out from here. So it came back, on July 2nd, and then it hit, 2 weeks later, it went $78. So 65, 78, it's almost $13. It went higher. So anytime it comes back here, it's probably not a bad idea to buy it and let it go there. And then, use the volume profile as your buddy here. And you see here that it might, even if it breaks these levels, this is the next level of support. So if it goes here, this is a great entry for going long, actually. While everybody else will be shorting, that's a good bounce play. And then if that breaks, then you're most likely going to be hitting this POC. This is where we exploded from earlier before. So short term, can they drive this price down? Well, the Germans say that everything is okay, and they're excited that they got their reserves and all that ready. Sure, of course, because then it would entice Putin not to do that because the impact will be minimal. But I just think they're checkmated right now. They're going to get dumped below, and then I would be a strong buyer at this level. Shares and options at XLE. I mean, this is this right here is going to be free money on XLE. So that's your short-term, long-term goal on XLE. Does that help? Okay. What else do you guys have?
Somebody asked for AMC in YouTube.
No, I don't trade that crap, but I'll do
it. Kind of figured you were gonna say that. I don't know if you've heard the latest shorty as far as the news, but they're releasing an ape, or they're releasing a dividend in the form of an equity called APE, APE, which is going to be like one for one per share.
Are they releasing it as a separate ticker or under AMC ticker?
Separate ticker.
Oh my God, they're fucking all the retailers. Oh my God. Hopefully you guys don't have shares. They're diluting the company, guys.
They're saying that it's to basically get a count to see if there is a large amount of synthetic shares.
Oh my God. Well, yeah. Yeah. Whoever has shares, your break even here, it's a good spot. I mean, if you break this 23, if you're short term, I don't know, I would put 23 just because the even number. And you can short the hell out of it right below this level here. Once it loses, what is this, 22.48, and it's already below that. Oh, yeah. Well, let's see how it does. Let me see this buying action here. Who the hell is buying AMC at 22? Nobody. Yeah, nobody's buying it. Everybody's selling it right now. Yeah, so it'll be back at $12 by December. It'll be $12 stock again where it belongs. How many of you guys have VHS tapes at home?
I do, but I don't use them.
No, you don't use them. If you have younger nephews and kids, ask them if they like going to the movies.
Not really, they don't.
Okay, I think you get my point. The new generation does not give a fuck about AMC or going to the movies. That's not what they do. They rather do it somebody's house and watching TikTok and watching the movie at the same time. So this is prepping to kill a lot of people, this stock. And I know a lot of people that like to hold. My average price, and I don't know if anyone's from TA here in this chat right now, my average price on AMC was 182 when I bought it. And then we had this run there. I think I bought it somewhere right here in this area, 182, and that's, yeah, don't trade this garbage. I think healthcare will do well. I don't know, UNH. Oh, it has a compression. Oh, this is about to come back down. Look where they bounce again. Right at the value area high, huh? Okay, well. There you go. We're gonna short below here, 527.86. And we'll offload the shares here. 517. Oh, nice. $10 right here on buy the rumor, sell the news, man. Yeah, watch tomorrow. Because even these companies won't know what the hell that means. Too many unknowns right now in the market. Let's see. Let's see this. If they're able to break this, I mean, if you want to play along, I'm pretty sure the daily flag looks okay. It doesn't really have a pattern, but you could play this trend line here on it. If it breaks, take the high of the day. I'm pretty sure in 30 minutes we left some. Yep. So play the high of the day right here on the break. And if you want to wake up at 4 a.m., whoever wants to wake up, not you, Dempster, text me. It's going to reject here. Oh shit, he's out of office. Wow. He quit? And this level right here probably be perfect for long just to get over this supply here. Because if you look at it, it has 3x supply right at this level here. So you want 536 to break. Once you break 536, if you grab this little guy from break here all the way to here, probably V-shaped volume profile. Yep, right on. Rejected it. So break this. You have value area high of 540. So $4 move right here. Break that. You're going to 543. And this stock pays like crazy. I don't know if you guys traded it. I traded in, I remember this in 300 levels. Wow. When was this? Wow, it was. Yeah, it was 300. Traded it around this area. And there was another one. It's called yeah, this one. They went $1,000. 747. Okay. All right. Well, if you guys don't have anything else, we call it a day. Yeah, I'll get shares. Yeah. No. Maybe if I find a decent spread on that, yeah. But the spread is pretty nasty on UNH. But what does it look like to anyone here? Just look at the pattern here. What does it look like to you? So it has a double top, the same as SPY, and it has a rising wedge into a supply. What could go wrong here? Everything. Let me see SPY here. I'll show you guys. The SPY has the same exact setup. So here's your SPY. I'll be honest. You guys don't think history repeats itself. You haven't read enough books. And it goes on. I mean, there's one here. SPY loves rising wedges, guys. Really, really good pattern on SPY. What is that? AMSL? Or ASML? ASML? I think you're talking about ASML. Right?
Sorry, ASML. Yeah.
Yeah.
My dyslexia kicking in there.
Oh yeah. So this one is ready to come back down to earth. Is this the chip maker? I believe this is the chip maker, right? Yeah, this is, unless it can break this level 548.
Yeah, it says the world supplier to the semiconductor industry.
Yeah. I mean, it did break this uptrend here, or downtrend, I'm sorry. Came back for a retest. It really needs to break that 584. Then if you look at this bad boy here, man, this is a massive down channel, man. Yeah, so we could go all the way to here. What happened to the bill? Did they pass it? Like the chip bill? Oh, it did get passed. Okay. Does anyone know any provisions of it? Like who gets what? I guess the bigger question I would have, did they have watchdogs on it? Yeah, if they don't have watchdogs on it, it's gonna go nowhere. So you're 584 to 600, 600 breaks, you're going to 650. 650 breaks, you're gonna reject pretty hard right here. You're gonna reject at 690.28, gonna set up a little trap. Then you're gonna fly to 700. You're gonna kill all those puts, go over. Once you hold and break 700, you're gonna go all the way to 750 here. So that'll be the plan, long-term plan. No, yeah, I mean, this is an opportunity in a lifetime for chip makers. I mean, yeah. Our friend Nancy is probably long on this. Probably not, right? But yeah. All right, guys. Well, I think that's it for me. I'm gonna go get some sleep. Almost 11 o'clock. I'll be live tomorrow trading. So I'll catch you guys tomorrow. We'll see if we can. Oh, I'm sorry. One more thing. Before I forget. Our 1K account. There's a couple of rules that I just want to mention to you guys. So we're gonna do this. If we can, do it for 150 days. And stay. Like I promised you guys, I'm not gonna trade my big account at all. I will only trade the small account and see how far we can grow it. I will give it 150 days, see if we can get to this amount. And if we don't, that's okay. But the key is to grow the consistency here. And the rule is that we get at least 3% per day, which is tough. Don't think it's easy. Once you get into the larger sums, right? You're talking about, let's say 60K, growing at 60K to about 63K. Sounds easy, but it requires a lot of patience and it requires a lot of discipline. So what this would teach you, if you're able to accomplish this, is a lot of discipline. And if you can't grow $1,000 to 100K, then you can't grow $1 million to 10. You're going to lose the same million as you would the $1,000. Your discipline of $1,000, you need to treat it like it's $1 million. When we do the trading, no more than 20% per position. So if we start off with 1,000, right, 200s are each trade, right? That doesn't mean we can't trade more than 5. But if it's 220, I'm not going to say no to a contract because it's $20 over that or 2% over it, right? So stay around 20, keep the deviation, max 25%. Don't go more than that, which is 1/4. Look for trades 2 to 1. That's what I'm going to be doing, trying to grow account 2 to 1 all the way down. So if I'm looking for, let's say, 30% profits or 20% profits on the trade, when you calculate the stuff, I'll place my stop loss at 15%, stop loss drawdown, or 10%, depending on what the setup is. So look for 2 to 1 as much as you can. I'll be trading live, and when I call out the plays, I'll do my best to type them up. But as you guys know, when I'm trading live and these plays happen to be fairly quick, sometimes it's just impossible for me to be trading, entering a trade, update the log. Well, sometimes I don't update the log immediately, but update the log the trade, and then kind of commentary live trading. I'm just a human. I can't do all of it at once and be successful at it. So if I was to do it, I would probably ask if somebody's there. We would call out the plan. Like tomorrow, you have a plan for Amazon. You have a plan for a couple of stocks that we covered, right? We talked about the levels. Look at that one stock and just eye it and watch it the whole time. And if it doesn't happen, you don't have to take a trade on day one. It's a day one when you start and when you do a trade. Doesn't mean tomorrow is day one, the day after is day two. It's whenever the setup presents itself is day two. It's not, sequential where, in 180 days or whatever we put 150 days, you have to get this every day a trade. Maybe we get a trade here and here, and let's say I took that, if you guys remember, I took that 1K account and it's already at 28.76. So that would mean I don't have to trade, I guess all the way up to here. I already covered 35 days. So if that's the case, well, then I can just take it easy, right, and relax. So if first day, let's say you make 1250, well, that doesn't mean, man, let me get my position sizing and increase it, blah, blah. No. The key is to stay consistent and grow it. Is this fucking boring? Yes, it's very, very boring. But let me give you an idea. Let's say you do 3.5% here, and you do this for 150 days. Here you go. It's not so boring right now because you're going to be pocketing 174K. And then, you keep going. Here, just to give you an idea of how many days it would take you to become a millionaire. Let's see. On 201st day, you become a millionaire if you can stay disciplined enough to do it. Wait for the setups, use our setups, volume setup that we have. Like, we talked about, what was it? I think Amazon and even XLE had a really good setup that we just talked about momentarily. What was XLE here? Where was the chart? Is it here? I think it was this one. So, I'm not saying for this challenge that I would wait here, but on a similar setup, whether it's, 10 minutes, 30, you want to play the trend that it's in, right? The stock is trending down now, so that means you're looking for the rejections. I'm looking where to short it for a moment that it's in right now, right? So there's a high potential for a short of about 75 and so on. So you can use these setups to give you a high probable setup where you have a plan, where you have an exit, and you can manage your risk. This whole account here will depend on you managing risk, not you taking profits. If you're able to manage your risk and grow this, whether it's, you see how we grow 35, 70, $100, you don't really double it until about 20 days. But in these 20 days, you're going to learn enough process and patience that now, in 20 days, you doubled your money. Well, now let's just say that this was, let's say you were like, man, 120 grand. I'm starting off this. Once you start hitting some of these numbers that are high up, like millions, they start compounding so nicely, and you won't believe it how quickly these numbers grow to like billions and trillions. I'm not saying it's easy. It's super, super difficult to achieve this. But the key for us is to teach you to go from 1,000 and to continue growing. If you can't grow 1,000 account, you will not grow any account. It doesn't matter who you are. And you can't go from 1,000 to 1,000,000 in 10 trades. If you see that, just run away. You're never going to achieve that. Yeah, pros one. My goal is not to be. It'll be Shorty's corner if I have a chance to call it out and type it out at the same time. But we all have levels from the watch list and what we plan on doing. So if you're not on live, you should still have the levels that we're planning on trading. Right. So SPY we covered. Where was SPY here? We had the plan. I don't know if it was necessarily this. I think it was a middle chart. Yeah. Not seconds. So we said, if the 410 breaks, this is a pretty good short. You can take it. If you see that it's a bounce, you can put a buy order here and a tight stop loss right below the 410. Even give it like 20 cents or 15 cents right below, and look for a buy. And then if it breaks, watch for retest. Then we go short. So you already have the levels, but you just have to be, you have to be disciplined enough and patient enough to watch. Because here we're looking up for, in 10 minutes, it's looking like a little planted head and shoulder so far right here. Left shoulder, right, now break it. We have 1, 2, 4, 10, easy. Let's just check ES1. Oh, it's setting up for another dump here. Setting up for another dump, guys, here. Okay. All right, guys. Well, thanks so much. I'll catch you guys tomorrow and get some rest, and we'll be ready to fire tomorrow.
Thanks, Shorty. You crushed it tonight. It's a really
Thank you
good
guys.
class.
Everyone.
Thank you, Shorty.
Bye.